How many of you have completed watching all videos? So this assignment videos are the basis of discussion to live session. If you don't watch, then you may not understand everything because it is a step-by-step knowledge. So even if you are lagging, I think you can complete because we are not posting too many videos. It is optimal, hardly 3 or 4 videos in a week, maximum 2 hours. How many of you are attending G10 meetings or G10 are not active, inactive? So it is the responsibility of the scholars to keep G10 activity. So active scholar and passive senior guides or preceptors. If you don't ask questions, preceptor will not be able to understand in your mind. So G10 activity is responsibility of the scholars, not preceptor. Preceptor are there to guide you. If you attend the meeting, ask question, they will answer. If you don't attend, they will not be able to answer your questions. Not taken G10 meeting any. So if there is not a single G10 meeting till date, kindly message the admin that G10 meeting is not conducted till date. We will see what to do. So let's start again. If you are curious, go and check the bulk buying happened in the COVID dip. Ambani family bought Reliance when COVID on the third week of March 2020. This is legal. It is not illegal. Okay, uh, because they are the investor. Although there are some restriction, they have to inform stock exchange, SEBI, etc. But this is a legal way. Everything is illegal. Now, what is happened in the bonus issue is that company dividend. Let's say company makes a profit. What company can do from that profit is usually number one is the debt repayment. Okay. Second, they invest. It's called as capital investment, capex. Third, they can invest asset investing. Next, they can give dividend, that is a share of profit to the equity holders. Okay, these two are usually called as retained earning. Earning is retained. Okay, dividend payout. But what happens sometimes instead of giving dividend, company issue bonus shares. It means we told you that company can issue fresh shares and collect money from the investor usually. So investor get one share. So what happens when company issue bonus share? Company pays money for the shares to the investor. It means it is just account entry. What is account entry? Let's say this is the equity capital and this is the profit. Here money received from the shareholder. It when company issue fresh share, it is called a security premium. So received from the shareholder. So where company issue fresh shares, shares are issued, money comes in accounting statement in a fresh share or follow-up shares. So bonus share is a fresh share, but instead of money coming from the investor, company take money from its own profit and put into the this segment called as capitalization of uh, reserve. This is capitalization of their surplus and reserve. So this only account entry. That means this spare money will be reduced and go to this. Eventually, if you see that everything is together, but these are just account entries. For example, your income is transferred to your children, although it is in a family, but on account it is separate. So in a bonus share, it is as good as giving the dividend. Instead of giving dividend, company is giving shares and keeping money with himself. Okay, so let's say to understand. Let's say this is a Reliance. Reliance give you dividend 2,000 rupees. This is investor. Reliance come with the fresh issue with the 2,000 share price. An investor again buy back. An investor again not buy back. Investor buy and give 2,000 rupees back. So initially, an investor has one share. Now it has two shares. Okay. Let's say do two-step process. First is dividend. This is what the dividend is doing. But at this time, if company says that we are issuing a fresh share as well at 2,000 rupees, and if you give back 2,000, they will issue one share. So what you are getting, the initial one share, and this is bonus share. So eventually money comes with the bank, and what is going out is just only one share. So this is just a account entry bonus shares. Okay, it is also called as indirect dividend. Okay, in a buyback, company pays to shareholder and buy shares from the secondary market. Why does it company do? Company have enough money and they reduce its own number of shares, so the return on equity increases. Okay, so these three things are giving money to shareholder. Okay, buying share back, and here money is taking money from the shareholder. Okay, let's go to the next level now. So you understood what are the activities company does: corporate actions, financial actions, and business action. Now let's understand. You want to classify the company. There are 7,000 listed companies, out of which almost 70-80% are useless. But if you want to understand the company, you want to classify company based on certain criteria. Okay, we have classification of biology in a medicine, in a classification of drug, classification of diseases, because classification help us to learn systematically and invest as well and do the company analysis. So what are the ways to analyze companies? Based on the whether it is manufacturing or service. Okay, I have mentioned in the video goods, manufacturing or service, or trading of goods, and agency. So traders buy the goods, take the risk, and sell to the customer. So they are basically in between. So these are the businesses, whether a company is a goods manufacturer, service provider, or just agent. Ola is a agent. It does not provide taxi service. Taxi service is provided by the taxi driver and owner. Ola is an aggregator or agent. Amazon is a trader. It does not produce goods. It it is a platform. It connects two people. Okay, it's agent aggregator. So find out the company classification. What is the business model? Based on that, you will the financial statement will be different for each type of business. Next is these are the standard or conventional businesses. Uh, Recent businesses are banking, then insurance. Insurance sell the peace of mind. Okay. Hospitals sell the relief from the physical pain. Insurance sell the peace of mind from the fear of loss. Religious service provider also provide the peace of mind. But insurance payment is considered as a premium obligation, and any religious service provider you consider as a donation. So it is one and same. Okay. Now you may say, but insurance company gives you compensation. Yes, it gives compensation, but so the probability is very less. First, event that probability of event itself is very less, and even event happens, the medic claim passing is also again less. Okay, so this is insurance is business is different. Then other business is like information business. So understand what does company do. Second, whether company is large, medium, small. There is a classification of SEBI. It is based on a listed company. Top 100 company are called as large cap. Out of 5,000 company, 1 to 100 based on market capital are large cap. Next 150 are called as a small, mid cap, and remaining all are small cap. Okay, this is the classification of market capitalization, but this is arbitrary classification. But practically for mid cap, large cap, so whether large, medium, small. Then stage, we are going to discuss a lot about this stage of life of company. This is not much discussed in the books or YouTube. What we discuss is always sector based classification, size based classification, which is available on the NSC India, and there are indices as well. This is not much discussed. That we will just discuss predominantly stage of life. Which stage of life company is, whether it is growing, mature, or decline. And then we can divide companies based on the whether it is a family business or professional run business. In India, can you write the family businesses? In India, there are around 50 to 60 people, less than 100 people, 100 families, which run at least 50% of the businesses in India. 100 families, only 100. There are 100 families in politics, which runs at least half of the political power in 100 families. Similarly, there are 100 families in the Bollywood. उसकी जगह Bollywood में जाएंगे नहीं, but politics and business, it is sure that less than 100 families dominate majority of businesses and politics. And that is how India is there. India is mainly a dynastic oriented society, whether it is politics or business. It is dynastic oriented since ancient era Raja Maharaja के पीछे जाते हैं, and that is also successful. Even in listed company, family owned businesses and professional owned, you classify that. There are pros and cons. Usually, family run businesses are very successful in India, and because they usually don't uh, sell share more than 50%, they always control, and they want to continue the businesses. Sometimes there are startup companies which comes there, they are Ponzi businesses. They just want to create value and sell the shares and exit. So that, but family business, this is not the case. Then based on the company, you can find out whether company are debt free or loaded or in between. So we say that if D ratio, debt to equity ratio is less than 3, it is manageable. Debt to equity ratio, it is calculated as non-current liability to total equity. If it is less than 0.3, it is manageable. Debt free means it is minimal, very minimal. Again, company we can classify based on the whether company is high capex or low capex. Capex means capital expenditure. Company buy machines, then building, then company plants, not plants, company factory plant, or maybe technology investing. So high capex, and there are certain businesses which need low capex. Okay, steel, uh, Tata Steel is a high capex business. Zomato is as such low capex business. TCS is a low capital investment. Then business model, whether it is B2B, that is business to business, or business to consumer. Okay, there are also pros and cons, but understand which type of business model, whether it is B2B or B2C. Siemens, which makes medical equipment, is it B2B or B2C? It is B2B. Mainly, it is producing the goods for the producing the further goods. So it sells equipment to hospital or diagnostic center. And then next is products, whether it is a producer or distributor. And then based on the competition, whether it's monopoly, oligopoly, and multipoly. Curious student learn about industry structure based on the monopoly, oligopoly, and this. Usually, monopoly businesses are sustainable. Oligopoly, that means if there are five, six players or three, four people, and they are competing with each other, the business is not good. Can you write the oligopoly businesses? And multipoly, the other word is called as monopolistic competition. The economics people call this monopolistic competition or perfect competition, but just remember this: monopoly, oligopoly, multipoly. Which is good for company, investor? This or which is the bad? Okay, good तो बाद में कहेंगे. Bad, which is the bad? Usually oligopoly is bad businesses because when there are only three four people, they compete with each other. Example, airlines, mobile connections, three four people compete with each other, reduce the price war. In a hospital setup, if there are three four consultant or this hospital and there is oligopoly, they keep price war. It's a danger proposition. When there are multiple player, then cutthroat competition, price war is not there. Price war is seen mainly in the oligo, because if there are 100 players, there is no competition for the top. If there are three players, then there is a competition. टॉप पे किसको आना है. 100 में सब लोग सेम रहते, एंड मोनोपोली इफ ऑलरेडी ऑन द टॉप. So oligopoly business is not ideal for investment. Okay, ideal is monopoly, and multipoly with differentiated products. Under the multipoly, there are two varieties where products are differentiated. For example, mobile, Apple is differentiated. And next is commodity. In commodity, products are not differentiated. All products look same. All sonography abdomen report looks same. It does not make difference whether X, Y, Z, who wrote. So when all products look same, it is called as commodity market. Steel, whether you buy from steel, Tata Steel, JW Steel, it is the steel. It doesn't make a difference. Steel is a steel. So when there are many hospitals and service become commodity, then only differentiating factor is the price. So if price is the only differentiating factor, then that business is not good. So what is not good is the oligopoly with cutthroat competition and commodity. These businesses are not good because eventually ये ऐसा ना lose ईरान यूएसए वो दोनों भी नीचे जाएंगे. What is good is the monopoly and multipoly with differentiated product. Differentiated products. Okay, these are ideal. These are not ideal because eventually they will cut throat and kill each other. And nowadays, hospital service, medical service has become commodity. There is not much difference. Maybe a differentiation at super specialty level, but at the level of specialist, MD RAD or DNB RAD or MD medicine, at least patients do not perceive the difference. So that is why it is very challenging to create a differentiation from the only medical practice. So the people who are having more patients have something, some differentiating factor apart from price. Price is one differentiating factor, but if price is not the differentiating factor, what else is there? That is the where you can try to do research, that if I want to get more patients but not reduce price, what else? That is where differentiation comes into picture. So you can create a lot of differentiation because medical practice is more or less commoditized. So our aim of company analysis is do the triage, the way we do the triage in the medicine. So when patient comes to you, also do the triage. What is that? Give the treatment, go home, take the admission or admit. But third क्या होता है? Triage. So if you have indoor facility, you have triage system. या तो ओपीडी बेसिस ट्रीट करो, घर पे भेजो, या तो एडमिट करो और रेफर करो. ऐसे ही होता है ना. There are only three possibilities you tell patient because you have to tell what to do. Either you go home with medicine, you get admitted here, or you say go to next higher center which I don't have facility. You go to higher center. That's it. इससे ज्यादा कोई करता है क्या? What is the fourth? I don't think there is a fourth system, fourth way to guide the patient. Correct? Go home with medicine, admit here, go higher center, period. So in a company we'll do this thing: reject, select, or watch list, or doubt. So you are very sure that with this medicine patient is okay to send home. You are sure that take this medicine, go home, no problem. You are also sure that this person needs admission and I can treat, admit. There is a third scenario. You say that it is not good idea to send to home. It is not good idea to admit here as well. Then we say that refer. It's a doubtful or watchful. So this is how we will go. So you have heard this diagram. आधे इधर जाओ, आधे उधर जाओ, बाकी मेरे पीछे आ जाओ. But when you say बाकी, then there is nothing. So I change this dialogue. 40 इधर जाओ, 40 उधर जाओ, 20 मेरे साथ आ जाओ. What does that mean? Out of 5,000 company, 2,000 rejected, 2,000 go to the doubtful, and only 1,000 come to my list. Period. So this is how we are going to do the triage system. Discard, outright discard, no further analysis, and then selection and watch list. So whenever you do company analysis, you have to do things. This is outright discard or doubt. Put in a. If it cannot be discarded, it cannot be doubtful, then select. What are the findings which we use to discard? Is outright is liquidity less than 1,000 crore. Market capitalization less than 1,000 crore. We discard immediately. We don't look at them. That means company with market capital less than 1,000 crore do not exist for us. Okay, so let's check how many companies are there and let's discard one by one. Suppose around 5,000 there. Okay, so what we'll do now, market capitalization more than 1,000. That means 3,500 are rejected in a single stroke. 40 तो 40 से ज्यादा उधर गए, आधे उधर गए. So this is rejection. First step in a is the rejection. Even in mutual fund, we have first rejection and then selection. Why? So that even you even if you go to the you go to the buy sari or clothes, what you do, shop owner show, we show 1 2 3 4 5 6. What you do first, your try system gets into active. नहीं ये तो मेरे को पसंद नहीं, साइड में करो. So you create two slot. One is ये discard, ये नहीं, ये black है, I don't need. ये इसको will pull it. I'll do further screening. So first step is reject. This reject, and the whatever remaining is then you try to use another screener or filter to select it. So the same logic here. First you reject so that you have limited time. You don't want to waste your time into looking at that. Reject. How many of you rejected by using the simple criteria? 3,500 straightway rejected by just using single criteria of market capitalization. Okay. Second, if there is no sales ही नहीं है, or there is no profit, we will reject that. Let's take one more theorem. And sales. Let's take sales of how much you want to take, 10 crores or 100 crores. Select companies with. Now this is not a criteria. I'm just giving how you can delay. You can have your 10, 15, 10, 20, 50, whatever it is. If I say that sales is company which are having sales at least 100 crores sales. These numbers are in crores. And if I run around 100 company is eliminated. एक और करते हैं. EBITDA. EBIT last year. Let's keep this also 100. So this is earning before interest, dividend, tax. 1200. So we are keep eliminating. If you add one more here, profit after tax, let's say 100. Gone. So by using this 3 filter, automatically all the company are gone. What you got is only 20%. As I said this, 40 इधर जाओ, 40 उधर जाओ, 20 मेरे पास जाओ. After 5,000, 4,000 are eliminated. Okay, by using simple criteria. Okay, thereafter you will try to use selection criteria. Okay, can you write what selection criteria you can use or what you are using as of now? This is Dr. Priyanka. She is a pediatrician. In a previous live session, we had another Dr. Amrita, who was a gynecologist. Now she is a pediatrician. And you are going to use the formula of pediatrician or funda of pediatrician. How do they do the assessment of child? What are the 2 things pediatrician look for when Pachu comes into the OPD? Can you write in the chat box? One is health, other is growth. Adult general medicine person is not interested in growth. He is interested in only health. But for the pediatrics, these two parameters are important: health and growth. Those who are pediatrician can write in the chat box. Do you agree with me or no? Health and growth. You are concerned with both. Okay, right. So weight height is a parameter for the growth, right? So that parameter we are going to discuss. But first heading is health and growth. Okay. With this framework, let's see how Priyanka will use the knowledge of pediatrics to the finance in the stock market. So the way we human has the life stage: birth, growth, maturity, decline, checkout, death. Human life cycle is in a same pattern. It is not only human, but even product life cycle, company life cycle, civilization also go in this manner only. Human birth, growth, mature, decline, check out the planet. Product, let's say Nokia phone, mobile phone, 3310, or camera, or STD booth. So 30 years ago we used to do the STD phone. So STD booth was one product. What happened to the STD booth? Even a cyber cafe, internet cyber cafe, there used to be cyber cafe where we used to go in 2002, we used to go to the cyber cafe and do the internet service. What happens to the products? Initially they came, introduction, they grew rapidly, matured, decline, and death. We don't see any STD booth on the roadside as of now. It has gone. We are not seeing the phone, Nokia phone, they are gone. We are not seeing the Kodak, the reel wala. How many of you are taking the photos with the reel is the roll? You have to change the roll and then take photograph, then numbers 36, 40. Now roll is over. The roll is now over. No one takes it. Even cameraman also. So Kodak has gone. Film is gone. Same with the radiology also. We use the that previously we used to have the films which we dip into the chemicals and then development. Now that has gone. So this is also product cycle. Now the company cycle, it's also same: introduction, that is startup, growth, mature, decline, and death. Now what is death? It is either liquidated and striked off or just dysfunctional. That means company is not doing business, nothing. It is just we say moribund and it's gone. Or company can reinvent herself, rebirth, and keep on going on. Let's take example of Reliance. And this life cycle of company is like human being. It is usually 80 to 90 years, or some companies check out in 50 years as well. Where is the East India Company now? At one point of time, East India Company ruled the half of the world or India, but now it has gone. So company also have the limited life. Some company have life of just 1 year. That is infant mortality death. 90% of company are closed within 1 year or dysfunctional. So here it can be dysfunctional as well. There are some company, they are dysfunctional, that no functioning. Sub company get the rebirth. Dhirubhai started company as a spice trading business, masala. So spice trading, he would send spice to the Middle East country. Then he entered into textile. Only Vimal याद है? Only Vimal textile. जब रिलायंस वर्ल्ड कप हुआ था 1970 1987, किसको याद है? मुझे याद है, हम रेडियो पे देखते थे, टीवी पे देखते, रिलायंस वर्ल्ड कप. तभी विमल वाज द टेक्सटाइल ब्रांड. Then it went into the oil to company. oil to chemical, that is oil refinery. Then it went to the Anil. They split, brother. Then Anil Ambani went to the into the finance, and then mobile. But let's focus to Mukesh only. Then after oil, it entered into the mobile. No, I think before mobile, it entered into the retail, Reliance Retail, then mobile. Then now they are trying to enter into the banking system, then AI. So what they are doing is continually reinventing. Okay, then Mumbai Indian and so on. So continuously reinvention is the one way. That's how company goes on. We are interested into the investing ideally in a growth phase or at the most mature phase. We should avoid decline phase, death. So we avoid the company which are declining. We, and even we avoid into the introduction startup because it is usually pre-IPO. So after listing, usually we will find this stage: growth, mature, decline, and death. Now, death can be two types. One is slow death, fast death. Can you give one example of fast death? Fast death, DHFL, S Bank. Now you may say S Bank is still there. See, if any company hits share price 20, it is as good as death. We call this as a गोटिया stock. ऐसा होता है ना, गोटिया खेलते 20-20 रुपए का गोटिया लेके. So any company hits share price crashing from 500 to 100, 150, 30 and 20, it is down. कुछ और बताएंगे? कॉक्स एंड किंग्स में बताया. सत्यम और कौन सा है? So fast death है, fast death within 1 year. Baiju, Sahara. Vodafone is transformed now. Vodafone is not as such dead. बाकी वाला रिलायंस कम्युनिकेशन अनिल अंबानी पूरा पैक चला गया है. सो अनिल अंबानी इज द क्लासिक केस. सो इफ यू वांट टू डू व्हाट अंबानी फैमिली इज a classical example of what not to do and what to do in business. If you want to understand what not to do, understand the Anil Ambani, and what to do, understand the Mukesh Bhai. So you can imagine the same parent, same house, how two people can go in a completely different way. Okay, a big bazaar bhi gaya na, big bazaar also gone. Kishore Biani na was the name. Jet Airway, Unitake. So these are fast death. Apart from fast death, there are many companies which are dying slowly. Initially, they were part of Sensex, but now it has gone. Can you name some of the company which has slow decline? Kingfisher is the fast death. Tell me the name of slow decline. Nirma, yes, Nirma is a slow decline, slowly. BSNL, slow decline. अपना जो गाड़ी था ना वो एम्बेसडर HMT, BSNL, G business, G wala. So these are declining slowly. They are not into the fraud scam. So we have to learn to avoid the fast death companies and slow death company. Fast death usually happen due to frauds by the promoters, financial mismanagement, and excessive debt loan. So red flags. So we will discuss today also red flag, which can lead to fast death, which will discuss the red flag which can lead to slow death as well. So we are not interested into this area. We are interested into only growth and matured company. Okay, let's put this way. To guess health and growth, what are the parameters pediatrician use? Pediatrician, see, I am building the knowledge of finance based on the knowledge which you existing have. Okay, that is easy. You can have the already fundamental knowledge of pediatrics knowledge. You just build on the finance. What are the parameters of health? So first, health growth speech milestone is a growth parameter. Let's focus on health. So health parameters are our body parameters: temperature, pulse, BP, weight, vitals, other things, respiratory rate, abdominal palpitation, tender rigidity, guarding, and so on. And then go to the growth parameter. Tell me the growth parameter which pediatrician look for. और एक chart भी रहता है, chart. So they guess chart not by single observation, but two observation, right? So if you do the observation, single observation, we call this as a uh, cross-sectional information. If you do the 2, 3, 4, we call this as a longitudinal based or time series data. For example, first बच्चू आया उसका 3 kg वेट था, नेक्स्ट टाइम आया 6 month, usually within 6 months it has to double, right? It is to 6 kg बराबर. But you say that after 6 months baby is only 3.5 kg. You say no, कुछ तो गड़बड़ है. This is not growing. So how do you decide the growing? By taking two different measurement. So growth is, for to understand the growth rates, you need two observation: last year, first year, or maybe previous data. We can use the single in a cross-sectional data is a BMI. So BMI is what? BMI, body mass index. Head circumference, abdominal circumference, ratios, various ratios, height raised to weight, then इसका होता है ना कुछ ratios. So ratios होते हैं. So same concept we are going to use the ratio and rates. So two words. What is two words? Ratio and rates. Rates means growth rates. The difference is very small. Ratio is x by y. That means some x factor, weight and height square in centimeter. So this is another factor and this is another factor. You just take the ratio, very simple. Or maybe body circumference का कुछ और होगा, तो it's simple x and y. Rate is second observation divided by first observation. This is the rate minus 1 into 100. This is the rate. Second observation divided by first ratio, first observation minus 1. You can write this way as well. Second observation minus first observation divided by first observation. This is also rate. But if you simplify, it looks like that this f get cancelled. So it becomes 1 SF second observation divided by first observation minus 1 into 100. So you can see that rate is also nothing but 1 ratio minus 1. Okay. But in rate, the parameter is same. You cannot take the parameter of height and weight. Weight to weight. In a rate, its parameter is same, only first and second observation. Okay. So we are going to discuss this health and growth ratio. So growth ratios, we usually talk about sales growth ratios, EBITDA growth ratios, not ratio, it's the rates. Always remember, growth is always a rate, okay? Growth is always rate. Same parameter observed 2 times and the rate is calculated. Rate of OPM, different rates. This is a ratio. So these rates are limited. and based on this we decide whether it is healthy or growing. And our aim is to avoid the declining and dying company, focus mainly on the growth and mature company. To do this we do fundamental analysis. We call this as a 4P analysis, and I'm teaching this since 2019. It is the same 4P: product analysis, promoter analysis, profitability analysis, price analysis, that is valuation. Now the fundamental analysis of we'll take break in 1 minute. We'll discuss this slide again detail after the break. Is of quantitative analysis and qualitative analysis. Quantitative is the numbers and qualitative is the stories. Data versus story. Most of the retail investors do not understand the data, so they invest based on the stories. Media people rarely discuss data, they discuss mainly stories. So some people invest based on the only data. The people who are from engineering background or the people who are good in mathematics, they focus only on the quantitative, and the people who don't have the math background or not comfortable with number, they based on the only stories. You will ask which is the best approach, whether it is data based approach good or story based approach. I would answer both. We are interested in data driven story. Data first, story le lenge, but if there is no data we will not listen to story. So data and story, this will be differentiation between average retailers and IMP graduate, and story or data driven story. If there is no data, story has no significance. Only data does not give entire picture. That's why data driven story is our approach. Data driven story is our fundamental analysis.